Morgan. I'd like to welcome my guest, Ed Lazear, former chair of the President's Council of Economic Advisors under George W. Bush. Ed, it's great to have you on Jobs Friday. I'll get right into it. A couple things that jumped out at me. Of course, the notion of employment to population ratio, always a favorite of yours, going sideways at 60.6. But, you know, at the beginning of 2018, it was 60.2. And the labor force participation also going sideways at 62.8. At the beginning of last year, of 18, it was 62.7. Maybe the counterfactual here is that the demographics are being eaten up by people coming back into the workforce. What do you think about that and all the data in today's report?
Very good observations, Rick. You actually hit it. In fact, this morning, when you were on earlier, one of the things you said is that what you think about the most is people coming back in, and I do too. It does look like we're getting close to the top, though, and I'll tell you why. There are a couple of things, some of which you just highlighted. One is the employment to population ratio has leveled. It actually peaked at 60.7 earlier this year and is now back down to 60.6. So as you point out, that could be the demographics kind of overtaking some of the business cycle stuff. The employment number, you know, we know that was on the low side. We're still at 151,000 over the last 3 months, which is what I usually look at, and that's well above population growth. The other thing to note, though, and I think people haven't pointed this out, is population growth has actually slowed and slowed considerably. So what that means is that the number of jobs that we would expect to see coming in each month is going to be lower. And so even the 75,000 number, which seemed like a low number, is still above what we would expect given the population growth over the past few months and even over the past year. So, again, I'm not troubled by it in the sense of thinking that we're going in the wrong direction, but it does look like we're getting close to the peak. And, we've been talking about this for a while now. We said, I remember when we talked earlier, maybe in last fall, we said, maybe another 6 months to 9 months we'll be starting to get close to the top, and we're probably getting close to that now.
All right, everybody's talking about it. It's water cooler, in taxi cabs, in Ubers. So what does this do to the Fed? Are they going to look at it like you've just described it and kind of hold pat? Or is the pressure of the markets, not only here but globally, going to demand that they do more faster?
Well, I think that the big deal with the Fed right now is they're kind of in a game of chicken with the White House because what we have going on, obviously, the stuff on tariffs, some of those things are negative forces right now in the economy. Whether they end up in the long run being good things is something else. But right now, they're negative, and I think the Fed is sitting there saying, gee, we wish you guys wouldn't be doing this stuff. But given that the White House is doing it, the question is, what's the Fed's response? And I think my sense is from listening to the chairman and some of the other members, they're probably thinking, well, we don't have the luxury of saying we're just going to tough it out and call their bluff. So I would guess that the Fed is going to move.
Now, on our final time here, 3.1 is average hourly earnings year over year. It is the lowest level since September of 18. Obviously, we've been up to 3.4. Is that a dire warning, or is that just slipping a bit for obvious reasons until potentially we start to see maybe more on trade actually get solved and come back into the marketplace?
Yeah, I don't see it as a dire warning. Again, I would say it's consistent with the other numbers. We had a very good year because we took the brakes off of the economy. What happens is that's going to be a short run, one-time effect, and then once you get back on track, you don't expect quite the same growth that you've had in the past. You expect the same levels, but you don't expect the same growth. And so I think that what we're seeing right now, again, is that we're kind of topping out. That doesn't mean that we're going to go in the negative direction. We could have a plateau, but it's much harder to grow the economy, to grow wages, to grow anything else when you're close to the top than it is when you have a lot of slack in the economy. We just don't have a lot of slack in the economy right now.
Excellent. Well, thank you, Ed, and I hope you have a great weekend.